Okay, good morning. Today I want to talk through my GBP USD trade, which I entered on the 17th of February 2010 and exited on the 19th of February 2010. Now, before we get started, I've had a lot of questions asking where I've been and etc. etc. I've just been really busy. I've still been trading. I've been watching from the outside. I've still been watching the thread and answering email. So if you do want to get in contact with me, the best form is either email or my Skype, or send me a private message on the forum. Okay, so starting off as per usual, this is the daily chart, GBP USD, as I said before. Okay, so for those of you who follow Elliott wave, you can see that the GBP put in its third wave, nice move down over the past couple of weeks. So if we follow Elliott wave, here's the first wave, here's the second wave retracement, here's the third aggressive wave down, and now we've just completed the fifth wave, final movement down before we can see some sort of consolidation or retracement. So knowing this information, how do we go about trading it? Obviously, we're in a downtrending market, so we want to be looking for places to sell this. So I'll take you in exactly where I sold it and why I sold it, and where I exited and why I exited at that certain point there. Okay, so you can see based on the daily chart that the price has been in this fourth wave, or was in this fourth wave for quite a long period of time. You can see when it's fourth wave, there's no clear direction. The price bounces up and down quite aggressively. In a ranging environment until it reaches a final point of a strong resistance before pushing in the final fifth leg down, the final fifth wave. So I actually entered on the 17th, which is this candle here. I actually took an early entry for this based on a channel resistance line. We can go through that now. There's a few ways you could have traded this, either from an early entry from the channel resistance line, or an actual break of the channel. Of the fourth wave channel. So we'll go through that now in the 4-hourly chart. Okay, so now you're looking at the GBP USD 4-hourly chart, and you can see I've Fibonacci studied the third wave, which is the high of 160.62 and the low down here of 155.73. So that was the third wave final movement down there at 155.57. Then we started this fourth wave. As you can see, I've marked out this quite nicely this nice price channel where price bounces between it. So you can see it's touched it there again here. So it's just bouncing in this upward facing upwards moving price channel. Okay, so where do you want to actually be getting short of this? So there's a number of ways you can trade this third wave. You can either buy the bounces from this support line, as you can see I've got in here, this red line as I've got here, so around here. So when you get the MACD confirmation, this point here, then you know that when you get a MACD confirmation off this support line, then they're quite good signals to take, as in this one here. So you've almost got a hammer with this candle here and a MACD confirmation down here. So they're the kind of high probability trades you want to look for. If you are going to trade fourth wave, then you've got to lock in profits. I wouldn't say leave them run like third wave or fifth wave. I'd really really lock them in, because the price can aggressively turn around like you've seen in the past. Okay, so basically you know that the fifth wave has got to be complete if you do follow Elliott wave. And so whereabouts are you actually trying to get short of this? Well, the best place to do this is at the topwards, the risings resistance line, as you can see this red line here. Also, if it comes in conjunction with a Fibonacci study, so the more convergence of studies there are, the better, and the more probability that the price is gonna turn around. So I actually got short of this region here. You can see that they're an aggressive belt holding candle up. Now this means there's strong momentum in the market to the upwards direction. You can see there's the price opened at its lows and closed to its highs. So that's a real indication that there might be, there should be higher prices to come if this market is going to aggressively move back up. However, that's not what's happened. You can see straight after it, you almost had a star, almost like a doji. Really, it's there's a tight range. Not really taking the price up any further. So that means that what that means is the momentum in the market, which should have gathered in this strong belt holding candle here, really didn't conspire to much. It really extinguished in the next candle. So that's kind of a first indication that the prices might return to the downside. And then the next kind of a couple of candles really reinforce that, with you've got some spinners, and you've got a doji, and you've got another doji here, northern doji. So that's really indicating lack of momentum to the upside. So obviously, if it's not going to go up, then the only place it can go is down. So yeah, this is a key area here where you might want to be getting short. You've also got the MACD pointing in the downwards direction. you really got to take in all these different studies, and you might need to go down to the smaller time frame to actually make an entry, which is exactly what I did. So if we go to my actual entry point, this is the price action now live on the 19th. If we go back to exactly where we entered, or where I entered, is this candle right here. So you can see it 2 o'clock on, it's 3 o'clock on my screen, but it's an hour fast. So yeah, 2 o'clock GMT on the 17th. So you can see the price has aggressively moved up quickly here. That's from the 4 hourly chart I've just shown you, and then price is in this consolidation period here, and really undecided about if it's going to continue in the upwards direction. Until you see this point here. So this candle here really, this is, if you follow simple candlestick patterns and highs and lows. So this is your low and this is your high. This is your low and this is your high. So it's continuing in an upwards direction. This is your low, which is now lower than this, and now this is your high, which is lower than this. So that's it. That's your point there. That's your candle, which is almost a bearish engulfing pattern on the hourly chart, GBP USD, indicating that price is really going to move down to the downside. So that's your key basically, and that was my entry. So all these signals come together from the daily chart, the 4 hourly chart, and now your hourly chart as give you an indication that the price is going to return to the downside. So that's exactly where I entered at 157.63 on the open of this candle. You can see there. Okay, so where are your stops and where are your take profit targets? Well, obviously your stop wants to be outside this to coincide with the Fibonacci retracement line, which is 50% at 158.10. So your stop should be somewhere outside there if you're thinking about money management. Okay, so where are your price targets? Where are you expecting this to go? There's two ways you can really play this. You can either treat the channel as a breakout. So if it breaks out of the channel, then the price should go the width of the channel. Or failing that, you can use Fibonacci and use the extension points to your advantage. So if you just count on 4 from where it's, or 3 or 4 lines from where it's actually retraced to, that's your primary and secondary target. So this is 1, 2, 3. So you can pretty much guarantee, say, that the price is going to return to the 155.73. It actually came down, the secondary target, sorry, would be 154.97. I actually came out at 153.72, and I'll show you exactly how I did that. I used a trailing, not a trailing stop, I used a stop to protect my profits. So I was watching it on the 15-minute chart, providing that it was always making lower lows past this point and lower highs. Then that's when I was willing to move my stop right the way down. So as the price moves down, you want to be putting your stop maybe 20 or 30 pips or even 50 pips away from where the current price action is, just so you can net the most out of the move. I actually came out this point here, which was about 30 minutes ago. You can see you've got a doji here, which is showing lack of momentum to the downside. You've also, this is the first time where it's actually failed to put in a lower low, so you can see